All right. Good morning, everyone. Brad Roltgen here with the Fresno Bitcoin and Cryptocurrency Investors Group. Today, we're talking taxes and kind of getting ready for tax season. We'll talk a little bit about some of the tools, but we've got time for that. More so what we want to talk about today is kind of planning through the end of the year if we have an opportunity to do some tax loss harvesting or other planning that we can't do in March. We've got plenty of time to work on the tools. I'm sure by February, March, there's even going to be some new tools out we haven't heard of yet. We'll talk about those down the road, but mostly today we're going to be talking about tax loss harvesting and any other planning. Deborah, do you want to give us a real quick just definition of tax loss harvesting, or when or why we'd want to do that?
Sure. Thank you for the surprise.
Oh, I know you're prepared.
Tax loss harvesting is basically taking a paper write-off. And what that means, I should back up and simply explain what the rules of the IRS are right now for securities. And securities would be things like stocks. So as an example, if you were to have bought an Apple stock at, let's say, $200 a share, and it fell in a bear market to $100 a share, if you sold that share, you could take $100 loss. But the IRS requires that you cannot buy that stock back for 30 days. And the reason is, if you sold that stock and you took the $100 loss, the IRS doesn't want you buying it back 5 minutes later, not really having had the loss, because you still own the stock for essentially the same price. So there's a 30-day wait time. If you don't do that, it's called a wash sale, and you can get into big trouble. Now, how does Bitcoin and Ethereum differ from that? Bitcoin and Ethereum, the IRS has defined as a property and not a security. So, if you will, there's a bit of a loophole that people have been using who own it, that if Bitcoin drops below their purchase price, they will sell it, take the delta in the loss, buy it back, and not necessarily face the ire of the IRS, because the IRS has not ruled on that at this time. And this is being done, over the years. I went to a conference put on by Directed IRA. There are a bunch of lawyers and accountants, and they actually spoke about this. This is a process that they use themselves personally and professionally. There is some discussion of intent of it being a wash sale, but the bottom line is there's no IRS regulation that says you can't do it. So even lawyers and accountants do it. And it's fairly well known. So what does that mean? What it means is that as Bitcoin or Ethereum, and I should differentiate it, only Bitcoin and Ethereum are defined as property at this time. The alts, who knows? And who knows in the future if the IRS will come in and say, these are all securities, we're going to backdate them as securities, and now you've got to look at back, taxes and problems. We don't know. Nobody can predict the future. But at least for Ethereum and Bitcoin, if it goes down in value and you sell it and you take that delta in loss and you buy it back, you're basically banking the loss as what would be called a capital loss that can be used against any capital gain in the future. So let's say, and this is not something you have to take the same year. Let's say 2 or 3 years from now, Bitcoin goes way up and you want to sell it, and now you have a gain, and now you have to pay a capital gain on it. You can apply prior losses against that gain tax-wise and reduce the money that you have to send to the IRS. So, and in between, the IRS, even if you don't have a capital gain, the IRS allows you to apply $3,000 a year of that loss to your bottom line taxes every year. And you can use that up as long as you have a loss on the books. So a lot of people, especially in this bear market, are going to be selling Bitcoin and Ethereum and banking losses, what we'll call it on paper. They buy it back, and they have their asset still, in their wallet. How's that?
That's great. That's great. And just to add our standard disclaimer, this is not financial advice. We're not financial advisors, accountants, CPAs, attorneys, that kind of thing, but just kind of sharing the information as far as that goes.
Absolutely. And
Yeah,
thank you so much for mentioning it. I am certainly not an accountant or a lawyer.
right. And these, these are just things that, we've read an article like this, and, we looked into it a little bit more and discussing it, that kind of thing. So that's kind of where we're at. Now you mentioned just the two coins, Ethereum and Bitcoin. I know there's been some others that have been categorized as securities, so obviously those we'd want to stay away from. But the other ones that are up in the air are just, sounds like they're just up in the air, so to speak, whether it's, Litecoin, any of the other thousands of coins. So would you stay away from those, or as far as trying to do tax loss harvesting on those, or wait and
There's no IRS regulation right now against any of it. One can speculate, would the IRS be retroactive? I think most, a lot of people are going to tax loss harvest no matter what the crypto is.
One of those attaboys.
there, Letitia, I just muted you. I think there's some background noise. Go ahead, Deborah.
Yeah, I'm going to say a lot of people are not going to worry about whether it's Ethereum and Bitcoin as property and everything else is non-defined. And they're going to tax loss harvest and, figure that maybe the IRS will come down with its regulations as they go forward. Nobody can predict the future. Personally, I'm going to be absolutely looking at, non-Bitcoin and Ethereum holdings.
Right. Yeah. Now, what about the NFTs? Those are obviously, I don't see how those can be categorized as security. So if I can take my JPEG of Elon Musk that I paid $10,000 for, and now it's only worth, $1,500, I can, sell that and take that loss.
I can't comment on the NFTs. I don't have any, haven't looked into it.
Okay. Chris, it sounds like you were getting into that a little bit. Have you looked into that part of it or seen any discussion in those circles?
And not really, except for the fact that if you pay for it with crypto versus cash, then I believe that you have to report the crypto purchasing. But as far as the NFT, if you're holding it, I don't think holding it's the issue. Like she said, it's property. But once you sell it and you get, depending on your capital loss or gain, then that's, and of course, if you do it with crypto, then that's also reportable.
Right. And it's not so much that if you're purchasing the NFT with Ethereum, for example, but you're actually, when you do that transaction, you're actually quote unquote selling the Ethereum. And
Right.
so you're closing out your position on that, so you have to go back to see what you bought it for. And that's probably one of the challenges as far as these reporting tools, because he's not just trading Ethereum for Bitcoin or something on an exchange. Now he's actually purchasing an NFT, which, we can easily, it's a little easier for us to view those as property. And so I'm just making a purchase. I'm not selling an investment, but by the IRS rules, we are, from the Ethereum standpoint. But I would think, the
Hey, Brad.
NFT. Yeah. Hey, go ahead.
Yeah, I'm in NFTs. You definitely
Yeah.
wash trade NFTs for sure.
Okay. So it's basically the same rules as the property.
Yes, it is.
Okay. That seemed to be pretty straightforward. But
yeah, a lot of tax harvesting went on at the end of last year because there was a significant drop in NFTs. So there were a lot of people that were selling them off and then turning around and buying the same or in the same category at the floor again. So they were actually using that as a way to reduce their liabilities.
Right. Just like we do, with other investments and that kind of thing. So good way to plan and, kind of count on the prices to go down there probably the last half of December, that kind of thing. So if you're looking to get into something, maybe wait and pick up some, as they go down type of thing. So good. Yeah. Anything else going on with the NFTs lately? I haven't kept up as much with those. Has there been any new, developments as far as that goes?
Well, NFTs are evolving at this point. The beginning of NFTs were essentially, everybody's joke, the right click save as. I got your JPEG. But the NFTs I've been investing in aren't JPEGs anymore. They're 3D models for use in the metaverse are the ones that I've been focusing on right now.
Okay. Yeah. Those.
So they're assets like PFP. They're not a PFP. They're like an avatar. So 3-dimensional objects that have motion or capability to articulate within the metaverse. Those are getting pretty big right now.
Right. Yeah, no, I think just, obviously it started with the JPEGs, but there's way more functionality of NFTs than, just the pictures kind of thing. So it's good to see that evolving. I think the metaverse is probably one of those things everybody's jumped into, and it's going to kind of play out a little bit until it actually functions
Metaverses are
financially.
really empty. They're really empty right now.
Yeah.
There's not a lot of activity in that world, but there's a lot of growth potential, and there's a lot of real interest in the potential. So people are still trying to flesh out what is an attractive thing in the metaverse world. Is it all pastel colors and cartoony looking things, or is it near real life? What are people really going to be interested in, and how are they going to take advantage of it? Not just from the standpoint of like multiplayer gaming, but events.
Oh, okay.
Events.
Well, tell
What's
Susie I
that?
said hi.
Sorry about that. Go ahead.
So no, I was just saying that how you're going to use the metaverse is what's not really clear right now. There's a number of people that are trying to make metaverses that are able to be functional, say, in business, so that you can have teams that are on opposite sides of the world get together in an immersive environment and interact in a way that's conducive to team building or project management in some way, right? That you can save the time of travel, you can save the expense of travel, and you can still have that experience of being, quote, face to face, unquote, and interacting in a dynamic way.
Right. And I did see, it was, I think, EXP Realty that, for the realtors, they kind of launched as a virtual real estate brokerage type of thing. And for their training, they'd have the agents go into like a theater or a room that, kind of looked like a theater with the stadium seating. And you could see all the people with their avatars and actually interact. And, hey, I walk over here and talk to this lady or this guy or whatever. And it was kind of like that. And that was a few years ago, even before NFTs, but they were trying to create that experience that was a little more similar to real life than just a list of people in a Zoom session, type kind of thing.
Yeah, the real next step is called mixed reality, or XR. This is the potential of XR is greater than VR and greater than AR. It's actually really incredible. If you think about the Google glasses that came out some years ago, and then they were a big flop because the technical capability of your phone wasn't enough to really make use of them in a way that was immersive. But now mixed reality is coming in all of the major players. The top 12 or 15 companies that are involved in consumer electronics, like Apple and Samsung and these guys, they are all going for it for mixed reality. They're building XR glasses so that you can embed digital technology into your real life activity.
Wow. Okay.
So within the next 18 months, you're going to see, I think in the first quarter of 2023, you're going to get Apple glasses. And then you're going to see Samsung not far behind them. And at that point, it's going to start being there's so many more potential users, right? Because people who are own an Apple and they want to get the latest Apple thing, and they have an Apple Watch, and now they're going to get the Apple glasses, then they're going to get turned on to this idea of how to interact with people and things that aren't real in their real life. So
Yeah.
there's some big changes coming there.
Okay, to kind of look at it from the investment standpoint, which is what we try to do. You know, and a lot of people have said, okay, this metaverse or that metaverse is going to be the place to be. So I'm going to get my avatars or characters or whatever in there. But what about the land part of it? You know, I've heard some things where, and I just haven't gotten into the whole thing other than just dabbling here and there, but actually buying, 10,000 acres in this metaverse or that kind of thing. So I'm sure there's that opportunity.
There is a lot of opportunity for land. It's not clear exactly what the land will be used for or how it will be useful. You see places like Decentraland where somebody, like big brick and mortars will come in and they'll buy up land and then they'll build a copy of their store. This is not exactly what the metaverse is really going to evolve into. That's Web 2 trying to get into Web 3 while still being in their Web 2 clothes. And so yes, land will be valuable, and yes, it will go up in value. You're going to have a certain measure of risk tolerance and pain tolerance if you're going to want to get involved in this, because it's I hold a fair number of land assets, and they aren't doing much right now because there's not a lot of activity in these metaverses. And as the activity grows and the demand grows, obviously their value will grow. But, I can't really afford to do something like other deeds. Other deeds are 6 figures now. So that's like buying a house.
Yeah. And at least with the house, it's quote unquote real and it's not going anywhere, where these metaverses, maybe Apple has this great one. And like you said, Samsung is a little bit behind them, and they come along with theirs and it's, 10 times better. And so people bail out of the Apple one into the other one. I'm sure Apple will
So I don't think I think it's not the companies that make the hardware that will end up being the big winners in the metaverse space. So what you're gonna see out of things like Samsung's glasses or Apple's glasses is the ability to interact with these other environments in a more generic way to allow you to take advantage of them. So there'll be an interface for you to, quote, join the Decentraland or the Bored Apes in the other side in your glasses. And the glasses won't have the impact, and they won't be the ones that drive it. They'll be the enabling hardware. And
Right.
so
Yeah, go ahead. Did we lose you? Are you still there, Scott?
Nope. Seems awesome.
I think that has the most growth.
Okay.
Yes?
Yeah, and I just mentioned the names just to kind of be able to label them, where it's very easy to have, an alternative or a different metaverse, just like we went from MySpace to Facebook, type of thing, where if you own land, at the popular intersection near the off-ramp of the freeway in whatever town you live, that's always going to be a valuable location because of the location. But in cyberspace, if somebody develops a better cyberspace, there's a much lower barrier of entry to jump over to the new one. So now, same thing with the characters.
Some of those will be driven by the assets. So if you look at somebody like Bored Apes on the other side, you don't actually have access to the other side unless you own one of the Yuga Lab assets. So if you don't own a Bored Ape or a Mutant Ape, you can't actually get into that metaverse. Right. It's token gated.
All right. Yeah. Okay. Well, let's not get.
Yeah. Hey, Brad.
Yeah.
Go ahead, Chris.
Yeah.
Did you want to see like an example of how like CoinLedger, and as far as uploading or reporting NFTs using CoinLedger? I have a couple examples I can show you and share my screen.
Yeah, let's,
You
like I
wanna
said,
wait?
we'll get into that, more later in the year, but,
Okay.
we've had a bunch of other folks join in since we started. And guys, we're talking about more, planning for the tax loss harvesting or other opportunities that we, have from a time standpoint that go away at the end of the year. Anybody have any questions or comments or thoughts on that? And then we can kind of transition to the reporting tools. It's a Gloria.
So
Oh,
Hey, Brad.
it's a Scott. Go ahead, and then Deborah.
yeah, I was just gonna say, my understanding is that the tax loss harvesting on crypto is gonna go away next year. Like you have one more year of being able to do it, and then they're gonna change the rules.
Okay, so effective like January 1st,
I
23
think it's
type of
for,
thing.
I think it's the following tax year. I think our next tax filing period, you'll still be able to wash trade, and then the year after is when that won't be possible anymore.
Okay, so the taxes in the 2023 calendar year where we'd
I believe
file in
that's true.
24. Okay, well, yeah, we'll keep an eye out for that for sure. Deborah, go ahead.
Yeah, I was going to mention that also. It's that this opportunity window is closing. I was going to mention something else just before you leave the metaverse. If somebody wants to see something a little more advanced than what's being done on Facebook's Meta platform, go to YouTube and look at Second Life, which has been around for, I don't know, decades. It's much more, and you can get a sense of the technology that's been invested in what maybe a real metaverse will look like, and how you can decorate yourself up, whether it's humanoid or other. Um, and it also gives you a sense of, you know, when you talk about land, you may be talking in a um, more reality based. I need to buy a piece of land next to Snoop Dogg's land because of location, and that may be okay at the beginning, maybe to get somebody introduced, who wouldn't necessarily drop in on your land and whatever you're offering. But what will eventually happen is that all this is just going to be experiential. So with the glasses and everything else that will enable it, um, think about moving into somebody's space and you're in some fantastical realm that's been graphically, put together in some 3D situation with red skies and cool animals. And that's the kind of thing that's going to draw people in, not a boardroom necessarily. And
Yeah.
then within that environment, you offer something experiential. And who knows what that will be, but human beings are very creative.
Yeah,
And
no,
that's where the promise lies.
there's a lot more to come on that. Let's, maybe we need to revisit the metaverse and NFTs here in December, at our meeting, just to kind of catch up. And that's a little more fun, good thing to do in December kind of thing. If you guys have any links to share, throw those in chat, or if you're sharing the Google Doc, drop them in there. I just made a section, and then I think we'll do that for next month's meeting to kind of get up to speed on what the current activity is in that space. Okay, so yeah, let's go back to the talk about some of these tools just to get a little heads up on what's coming. So I've got these ones listed that I have, and again, this is from last year's notes that when we were talking about them. I know, let's see, Chris was talking about Coin Ledger. Has anybody else used any of these tools or have any feedback? You can just either chime in or throw something in chat. Just to share real quick, I've been using this CoinTracking.info for years, but it did not work for the decentralized, the DeFi decentralized exchanges. So to cover those, I used Zen Ledger, but for whatever reason, Zen Ledger didn't work with some of the exchanges that I had in the wallets. So I couldn't, my goal was to use one of these tools for everything, but that didn't work. So I ended up using Zen Ledger for the DeFi transactions, and then the CoinTracking.info for the other ones. Anybody have any similar experience? I know Chris mentioned something like that. Maybe Chris, if you want to, let me get this set up. You can share your screen here and show us a little bit about what you had to do on that. So I'm going to stop sharing. And Chris, if you want to share and show us a little bit on the coin ledger, just to give us an idea of what we have to do to really connect. There's kind of two ways to do it. Either you can kind of download your transactions and then upload them into these tools, or you can connect these tools to your wallet, to your exchange through an API, and then they can interact that way. So
Yes. Can you hear me okay?
yeah, perfect. And we can see your screen, so all good
So
there.
this is CoinLedger. I've been doing it for about 3 weeks now. I have an API with Coinbase, Coinbase Pro, Kraken. And so you go to each one of these, you can see how you can import them. And then it also shows, if you look as far as like my mining with Coinbase, you can see the staking, and it automatically uploads every transaction, which makes it very convenient because I have over 10,000 transactions with all my different, as you can see over here, Binance, crypto.com. It also uploads everything via the API. And you can see the trades, the withdrawals, the fiat buy, the composite swap. A lot of these things I haven't, it's all automatically uploaded with the file. So I haven't actually manually uploaded them. Even I'm sorry if you heard that. Even Bitmark, these I had to really kind of manually upload, I believe, because I don't think I have. Well, it says up last import, but I may have done that myself. There's not too many of those with Bitmark, but you can see FTX. There's not too many of those, but you can do these manually, or you can do them via API. The ones that aren't, like, here's Pionex with my bot staking, trading. It automatically uploads everything, mainly BTC and ETH. With the ones that don't have, like, CoinLedger doesn't do everything. It does a lot, but it doesn't do everything. And for the ones that it doesn't do, I even have my Ledger and my Trezor. Ones that it doesn't do, I have Ada Lite, which it doesn't do Ada Lite, but I had to manually upload it myself. For these are the staking for Ada Lite, and then also Ada Lite mining. I also have to manually upload those as well, and they're deposits of Ada. And how I did that was, and I actually staked Ada. Well, I shouldn't say staked. I actually mined Ada with, and I uploaded up here with Unminable. If you look at the Unminable app, you can see how I actually mined Ada, and that's where you have to always have a source. So where did it come from? So here's where I actually mined it, and then whenever I transferred it, automatically I had Unminable send it to Ada Lite, so that's a receipt. So that's a deposit. So you have to have a source. And you have to have, whenever you deposit it, you either purchase it, which is a fiat currency purchase, or you mined it. And I as you can see on the left here, over the year I mined Ada, I mined Doge, VET, and then at the very bottom here is where I start to get into my NFTs. And so CoinLedger does not allow you to automatically upload these. So, but what they do is give you a sort of a, like a, and let me show you here. So if I go here, Wax NFTs, all these are NFT purchases, and it was via Wax. And I didn't manually enter these. I did manually enter them into my spreadsheet. But if you look at my spreadsheet, here's my Wax XP spreadsheet. And so this is the template that they give you. It's the manual import template. And so you have to enter the date. And I did this throughout the year. And that's just how I was able to do it. I keep an overall spreadsheet on all my purchases. Very, I know, anal, but you know what, necessary, I think. You actually enter the date, the platform, which is optional, so you can put whatever you want in this column here. And I of course put Atomic Hub because I actually purchased these with Wax XP. And
yeah,
then
Chris, I don't mean to interrupt. I don't think we're not seeing your spreadsheet. If you're meaning to share that, you don't need to, but if you're trying to direct, we're still seeing the browser in CoinLedger.
Okay, let me see how I can share that. Thank you. Let me go back.
You may stop sharing on this one and then go back and share like the Excel document
Yes. Sorry about that.
You know, or you can share your desktop, but you know, if there's something on your desktop we don't want to see, you know.
Let's see.
And while Chris is doing that, I just want to point out that spreadsheet that you're seeing up here, that you can manually import, requires date and time. And you'll notice Chris's time is 12 a.m. because you don't necessarily know what time you might have done it unless you made a note at the very minute.
Right, and I did not. You're right, and that's absolutely true. And so you have to go off of, and CoinLedger actually has. I don't enter the price of Wax XP. Can you see the spreadsheet now?
Yeah, we're seeing it.
Okay, so I don't have the time exactly, the exact UTC. I don't have that, but I do have the date. So I enter the date, and then the CoinLedger actually has the amount, the price of Wax XP for that date, right? So then you on the spreadsheet. You have to put the like, let me start over here, the date, the platform, which is optional, which I used Atomic Hub, and the Wax XP is what I sent, and then the amount of Wax XP I sent, and I purchased see, CoinLedger doesn't have, and I even communicated with them that, you know, certain names of, they have an NFT, so that's where you're reporting really what you're reporting is the release of Wax XP for a property, right? And so sometimes, and I have done this, I sell that property, but what I'm doing is I'm reporting a gain, and how much did I sell it for? And in this case, all these are going to be let me see if I have any that are sold. These are all purchases. Yeah, I know, crazy, right? But most of them are really Funko. If you look at the left, I have a lot of digital Funkos. And I kind of, and they're for fractions of a cent, but I think they're going to go up because Funko is really a popular item. But anyways, that's how you. Let me see if I can go back to new share screen. Go back to the. Let's see. CoinLedger. That's how you enter in your own individual aspect of, you know, to say what they don't cover, because they cover a lot. CoinLedger covers a lot, and the APIs are really, they're really good in saving a lot of time, because if you, this is how you import, and then you go to the review, and once you're done, and believe me, it wasn't like this for I had about 15 to 20 reviews. This one right here where my little cursor is, to review. If there are issues, they will tell you, and you have to go back and find it. A lot of them are sources. So if you have crypto that just appeared, you have to go back and actually, that's one of the reasons why when I started doing this, I actually had to enter into 2022, but not only 2022, but also 2021, because a lot of the crypto was telling me, well, where did you originally get this? I had to go put my purchases in for 2021 for the ones that are just show up, you know, like Ethereum. Well, you say that you have, you know, 0.5 Ethereum, but where did you buy it? And so you have to go back and enter that as well. And once you do all that and you get this down to zero, and you have, you know, 10,000 reports or actual transactions, then you go to tax report, and it will tell you how much you have to pay for these, like the capital gains, the taxable income, and then in order to pay for this, and if you look at this, upgrade to unlock. So what they do is they tell you it's actually $300 for them to unlock this thing, because what happens is it's based on transactions, and I believe, let me see if I can go find it again. Pricing frequently asked questions. So here's the crypto taxing report pricing. So if you're a hobbyist with only 100 transactions, it only costs $49.99 or $49. Day traders, 1,500 transactions, it's $99. And then high volume is 5,000 transactions or less, is $199. And then of course unlimited. And I looked at mine. I don't know if I saw it there, but I have over 10,000. So I have to pay $299 for them to basically run my reports, and then provide that to, you can also share it with, I don't know if you guys saw this, I think, let me see, let me go back. You can actually, over on this side over here, you can actually share, not in this, the reports, add tax professional. So I have 10,809 transactions, and I can actually, that way, you know, the forms are at the bottom. Whenever you pay for it, you actually can actually add your professional on, so they can actually pull the forms themselves. And so that's just Coin Ledger, and that's a lot of work, in my opinion. Even with the APIs, depending on what you've done, and most of the work is going to be down here on the left, where you have like drip drops. I don't know if you guys, I think we mentioned it last time or maybe the time before, where they don't cover it in Coin Ledger, but you can actually manually enter it, like I have. And so these are payments of ADA. It doesn't count the receipt of the actual items because they don't have it in Coin Ledger. So, but they do, but the ADA, like when you do drip drops, I don't know if any of you have, it's basically you're paying ADA for you're getting rid of ADA, and you're buying the drops. And so that's kind of like buying NFTs, but it is different because you're buying tokens versus NFTs. Well, they're kind of the same, but anyways, that's my thing about Coin Ledger. It's actually been not so bad. Let me see, how do I not share anymore?
It should be just to stop sharing.
There it is,
Yeah,
right there.
yeah.
Yeah,
No,
there you go.
thanks for doing that. So on, just to clarify on those number of transactions for the different pricing levels, is that a per year transaction or more of a cumulative?
I think it's cumulative. I think it's the amount of transactions you have, and that includes all your mining, staking. It
Right.
includes, like I showed you that I do the what's the where I have bots actually doing it. The bots are count towards those transactions.
Exactly. And that there was one year when I started with the bots and went to this reporting, I'm like, oh my gosh, this killed me, because there was like 3,800 transactions and I only did it for like a month and a half or something. And it bumped me up to the next level.
Right now, I actually have 4 bots running on Pinex, and that's it's extremely there. It happens a lot. I do basically BTC and Ethereum, and I also have the Binance, or what is the other one? Anyways, let me see. I have ETH BTC grid trading. I have the BTC Infinity Grid. I have the BNB Infinity Grid, and I have the ETH Infinity Grid. And that the cumulative, that's a lot of transactions.
Yeah, that can add up. So if you guys start bot trading, keep in mind that you're going to have some reporting to do, and the tools are going to charge you a little more for all those transactions. But it's a fair way of doing it, because obviously there's more involved there on that. So yeah, thanks for that preview on Coin. Let's see. So that one, I'm sorry.
Coin Ledger.
Coin Ledger. Okay, they all sound the same. Yeah, I heard some other good things about Zen Ledger. Coinly, I think that one was a little disappointing. Yeah, there was a couple of these that people had mentioned, and then when we looked at them, they weren't that exciting. So yeah, anybody else have any experience in the last year or two on any of these reporting tools?
I did. I had good experience with Zen Ledger.
Okay, yeah, I did as well, and that was good.
One of the things I liked about Zen Ledger was that if they did not implement your wallet or your exchange, you could send them a message and ask them to. And they were very responsive about that, and were able to implement some of the things that I was doing into their automated process. That saved me a lot of manual work. And all I really had to do was shoot them out a message on their chatbot and say, hey guys, you didn't do this, and I have this. How do I fix that? And they said, well, give us a week. And it was 2 weeks, but it was solved.
Okay, so it was like an exchange or a wallet that they added that wasn't previously supported?
Correct. If I remember right, it was an NRG wallet for NRG staking and validating. And I didn't have any way to add it in. It was just a wallet, and that would be really hard because I was staked. And so I asked them to, how do I handle this? And they made a way for me just to import what I needed.
That's great. That's great to hear. I mean, and because some of these, any website can be up there and you never know who's behind it or what's going on. So that's encouraging to hear that kind of feedback on that. And they were,
to be fair though, it's $400 for the Premier on them, not $300. So it's a little more expensive to get the Zen Ledger, but the responsiveness was worth the price.
Well, yeah. And to, even take a couple hours to go in and enter some of these or update them, like Chris was talking about reviewing, and I've done that too, where it doesn't know where it came, where does these funds came from and that kind of thing. And that can
Right.
take a lot of time for sure. I remember doing one, I think it was about 3 years ago, and I probably spent 2 or 3 hours, and I got to a certain point. I'm like, oh, this isn't going to work. I backed up, so I think I went back to the CoinTracking.info one. So good. Oh, good feedback. Anybody else use any of these or any other ones that we don't have up on the, well, actually, let me switch the screen to share that again here. Let me share mine. Yeah, so the ones we're talking about were here. If there's any other ones that you guys have tried or used, I'm sure a couple others will pop up. Hopefully these will continue to support the new things that are coming out all the time in crypto. Let's see. Let's see. Mike, what have you used in the past as far as reporting tools? I know you've been doing this a while.
Yeah, no, I really haven't done anything accurately.
Oh, okay.
I was hoping you guys would come up with something. Yeah, because that's not the best for me. That's why I got an accountant to do everything for me. It's like I start getting into stuff and it's like, what?
Well, yeah, because the accountants aren't all up to speed. But it was
Right.
interesting, like Chris had mentioned that you could add a professional, to do that. I know there was, maybe that was the one where it seemed like there was at least one of these platforms that seemed geared towards working with a professional. So they almost made it free for you to use, but then to actually get the value out of it, you had to link or connect with a professional. And then the idea was that, the professional would end up, paying into the platform, to support that. And then you end up paying that professional to do your taxes. And that's, how the money would flow.
Yeah,
Which
then you got to
isn't a
find.
bad model.
Yeah, then you got to find an accountant that really wants to learn about it. Some of
Well,
the other ones don't want to even deal with it.
right. But in their platform, they had ones that they recommended that would, work with it. And they had signed up with their platform ahead of time. So I thought it was a good idea because, instead of hunting through the yellow pages or your Google results in your town, you could just go to this and find one. Now the guy might be in Colorado and you're in California, but that's a whole nother story.
Yeah, there's a fellow in Miami who I just spoke with last week. He goes by, I think it's Lorenzo Tax or Lorenzo Crypto. I'll send it so we can post it. But he specializes in crypto accounting and figuring out, not to lose money because of the gap, between some of these tools and what you're actually doing.
Right. Back to Mike, you'd mentioned that you weren't, it sounded like you weren't completely successful with using the tools. Where did you run into problems, or what kind of issues did you hit?
Yeah, I always have problems on some of the exchanges trying to figure out exactly where everything's at. I'm always getting lost when, looking around. Okay, what did I buy it for? And then how much did I make really? And then how much did I really sell? It gets really confusing for me.
Yeah, and that's where these tools are nice, because they sometimes will summarize everything that's going on that. Let me see.
So if you can't get the actual information, the blockchain scanner is your friend. So if you have to manually chase a transaction, then you can go and find that object is NFT or that wallet or whatever, and find the transaction where it happened, and then enter that transaction into a scanner like Etherscan or BNB scan, and then that will give you the actual transaction information, which includes your fees, the exact value, the exact time, the exchange components. All the information is there. And the best tools will extract that information and will subtract those fees from your costs so that you get something that doesn't show, hey, I paid 5 ETH for this, but I really only paid 4.85 ETH and I paid 0.15 in fees. Then you can get that taken off of your tax liability from the right tools, and the wrong tools will just give you a 5 ETH cost.
Right. Or cost. Yeah. This coin tracking, I got this one shared. Hopefully you guys can see it, that I started using, I guess, did I see in 2016? But one of the things that it does is it gives you this dashboard of all your holdings and your balance by day, this kind of thing. I'm afraid, or I'm sad to tell you, there is some inaccuracy, because the full value of all my coins, unfortunately, is not 358 million. When I use this tool to search for my stuff last year, it started picking up all these fake or scam coins that were on primarily BNB. I think this was the only one they really dealt with. And what happened is, they give me like 1 million of these coins, and they're like 10 cents a piece or something like that. Not of that coin that I had, but they had cloned like the symbol or whatever of a legit coin, and the coin tracking didn't differentiate between the two. So all of a sudden I look up and I'm like, whoa, I've got 3 million. And I'm like, well, is that real? So I looked into it, and I'm like, for $3 million, I'm going to look into it. So obviously here I've got even more now. So, don't give yourself a heart attack if this kind of thing happens. And you can kind of see here when it started. And this is probably when I added the BNB chain and all those fake coins. But so that's the downside, or the other challenge, Mike, of even when you're using a tool like this, there's some stuff that gets picked up because it is on the blockchain. It's really there, but it's a fake coin or a coin that's cloned another legit coin, and it's confused them, and that's really a problem. So just a heads up on that. Okay. So as far as what, Mike, when you're mentioning not being able to find the info, if you can do an API to connect to Zen Ledger, CoinTracking, or one of the other ones, the Coin Ledger, it should clarify things, because these tools will pull out the info that they need to give you, your cost basis and what you sold it for and your profit and that kind of thing. And then I hope, like Scott mentioned, hopefully they're picking up those fees, those transaction charges, which obviously with those bots, are going to add up, even if they're fractions of a cent. If you're doing, 800 of them a day, or even a couple hundred, they're going to add up over time, and you don't want to miss out on those expenses getting picked up to, reduce your liability.
So if you're on a central exchange and you're using an API, then there's a real good chance that you're not on chain. And so, for example, if you're on Coinbase and you make a purchase or a transfer of one asset to another kind of asset, that's all happening inside their centralized ledger and does not show up on a blockchain, so you can't scan it. And you're at the mercy of the exchange for the information about the fees that you paid, the actual price, and the actual value at the time that you liquidated whatever crypto asset for the other asset. So that can be a challenge if you're not on a big guy like Coinbase. You want to understand that if the exchange that you're on is not providing the best tools, it's in your best interest to collect the information at the time of transaction.
Yeah, that's a good point. And some of those bigger exchanges like that are actually issuing 1099s, which makes it easy, because that's what we're all used to doing for the last, 10, 20, 30 years, however long we've been investing. If we could literally just get a 1099 from the 5 exchanges that we use, because that's where the trades actually happen, that would be nice. But unfortunately, they're not all doing that. Maybe they're going to have to do that going forward. We'll, kind of wait and see. Thank you, Deborah, for posting that. I'm going to paste it here in the Google Docs. So we'll have after on that. Good. Yeah. So the exchanges, if you're doing all your exchanges in one place, that makes it very easy. But hopefully we've moved beyond from just using one exchange, because the one exchange doesn't do everything that we need. As far as that goes, a lot of us have started with Coinbase. I still use Coinbase quite a bit. But there's obviously a lot of things it doesn't do.
Yeah. Well,
I'm actually most worried about aggregators, because how do you do it when you do like a sweep where it goes to 4 different sites and collects things up. For example, if Jim XYZ allows you to buy NFTs from 4 different NFT sites at the same time in a single transaction, then I don't know how to do that. So I don't know how to track that. I think that's going to be fun this time around.
Are those all happening on chain or at that one site?
So the activity is on chain, but what happens is the site is an aggregator. So they're using your authorizations to reach out and what they call it sweeping. You go and pick up the bottom, half dozen or dozen or however many you choose things in an NFT ecosystem, like their PFPs, their Bored Apes or their whatever. Some of them are cheap. And so you can buy a few for just an ETH, and they allow you to see those prices. And the prices might be that the bottom ones are at 4 different exchanges, and you choose to buy all those bottom ones at the same time. Well, it's one transaction at Gem for you, and you get all 4 of them, and they go in your wallet. But they're not all in the same ecosystem. They're not all for sale in the same place. So understanding exactly how that you ended up with that asset and where the fees got paid and who got paid and all of that, I think is going to be hard, because some of these are just fully decentralized.
Yeah. So in that instance, is your transaction that you're seeing on chain in your wallet address just with that one aggregator site?
Yeah, so I'm not really sure yet, because I haven't had the cojones to go out there and do a sweep on multiple channels. I've gone at them one at a time because I'm afraid I don't know how to track it. And so until I understand it, I don't want to create a liability that I don't understand.
Or how to understand
you have to be able
right?
to show it. Yeah, I have to be able to show something to the IRS. The IRS can tell me, hey, you owe me $500,000, and I have to prove that I don't owe them the $500,000. Right. It's not on them to prove that I owe it to them as much as it is on me to prove that I don't owe it to them.
Right. So you need to track the 490,000 that you spent, for that $500,000 sale.
Yeah, exactly.
Okay, good point. Maybe try it with 2 at first and then see if you can track where both of those came from. But if that aggregator site is hitting you with the cost of the 2 or the 4 or the 10, for whatever price that's coming out of your wallet, but then how do you track back? Because there's not one transaction when you sell it. That's
No, that's why I'm trying to figure that out, because you can buy as many as 100 NFTs with one click.
Okay, I think Chris was jumping in. Go ahead, Chris.
So my suggestion there would be, okay, how much did you pay? If you paid $25 for 100, then basically you basically have $4 each, right? So
you can use this tool to sweep into millions of dollars.
Yeah,
I can't, because I don't have that kind of money.
The trick is tracking that $4 and assigning that $4 as the cost basis to each of those 25.
And it's not even this complicated. If you use KuCoin and you buy $100 of something, you may have 150 microtransactions for that one. And if you don't sync right, you'll lose something, and then you got to locate that. But imagine that's just KuCoin. Maybe it's 100 150 transactions for $50, or God knows, hundreds for more money. And so this is very difficult, and you have to be very careful going forward and document as much as possible manually, I think, just to sample. I wouldn't have known that CoinLedger, there's $16,000 of losses that they did not pick up. I would not have known that if I hadn't been manually in my own spreadsheet tracking all of my trades.
Right, because there's too many to keep up with. Yeah.
And some of them are going to lose. You're going to lose information with sites like KuCoin, or let's say even if you use SimpleSwap, or one of these swapping services.
Yeah, the
Right.
tools are key for
Problematic.
sure.
They don't do KYC. They're not going to give you any data.
Yeah. So Deborah,
Well,
how did you notice that they didn't pick up that's missing $16,000 of loss?
Because I knew roughly how much of a tax loss I expected to see I got an extension actually. So I just filed the rest of my taxes officially in October 17th for last year. So I knew how much of a loss I was expecting. Now, the good news is that I have 3 years to amend that.
Okay. Okay.
And find that 16K. But buyer beware, trader beware. It's a
yeah,
jungle out there.
some tools will help you. I use Blur, and Blur allows you to understand your basis in things that you didn't mint. I want to reach out to them at some point because mint cost could show you how much it costs you to get into something that you're minting directly from a contract. But when you look at Blur, when they show your asset, they show your cost basis on the asset, and then when you list it, because you can list on multiple sites through Blur as well. When you list it, they'll show you your potential profit and loss right there for an individual and for everything on your wallet that is compatible with them. So I have my NFT wallet has NFTs in it that does not, they don't count, and Blur doesn't see them because they don't implement those contracts. But for the ones that it does implement, it tells me everything about when did I get it and how much did I pay for it, and then how much I listed it for, and whether that's a profit or a loss.
And they cover sites like KuCoin or SimpleSwap.
Oh, they don't work like that. These are NFT aggregators. So
I got it.
So it's in the NFT world.
NFT world. Okay.
Yeah, the
But
NFT is going to be
that's a way.
complicated.
Those tools, yeah, those tools have to evolve. And Blur is one of the newest ones available right now, and they're really making waves. And some of what they do I like, because they're transparent about, okay, well, I paid 1.5 ETH for this. Now, if I go to sell it, I should probably sell it for more than 1.5 ETH, because they're telling me right there, hey, this is how much it cost you. Don't sell it for a loss.
Right. Yeah. And if you're dealing with hundreds that you might have, or kind of thing, you can't keep up with them manually, for sure.
Yeah. So having somewhere where it gives you your cost basis visibly when you're about to list it, that's pretty valuable. And that's something you don't find on Gem, and you don't find that on OpenSea, and you don't find that on LooksRare or Super Rare or any of those guys. They just don't tell you. So you have to remember that you paid 1.5 ETH for that NFT. And you have to know that when you list it for 1 ETH, that you're taking a half ETH bath. That's just, the tools need to evolve. That's the bottom line. In the next couple of years, these tools will be a lot more straightforward and a lot more capable, because what they're building today is on top of what they built yesterday, and what they built yesterday is still valid. It's just that it didn't account for everything. Maybe it accounted for everything in BNB or everything in ETH, but it didn't account for Polygon. Well, this year they're going to implement for Polygon. They're going to implement for the next thing. How to figure out your NFTs has got to be a big one, because there's millions of NFTs out there. So there has to be more reporting going on. The average person can't really understand all of this liability and exchange and all of that. There's, especially if you're using a bot that's trading multiple times a day, who can keep track of that? And legitimately, who wants to, right? I mean, the right answer is to pay for a tool that manages this information for you and provides you a bottom line which is compliant with tax law. And at that point, it's pay your taxes and move on. And whatever I own, and whatever I paid to the man, I paid to the man, but they're not coming for me. And that's what I care about. Is I'm not worried about whether or not I pay taxes. I'm worried about whether or not I pay the right amount of taxes so the tax man doesn't come gunning for me. And I don't want to give him more than he deserves, but I definitely don't want him to tell me I owe him $500,000 because I wasn't paying attention.
See, I
Right,
think in my mind, I think that they will be not only looking at someone like me who reports over 10,000 transactions, it's going to be looking for somebody who doesn't report, right? So maybe reported last year, but didn't report this year. I think they bought, what was it, 85,000 agents for a reason, and it's not going to be, hopefully it's not going to be someone going through my 10,000 transactions. They're going to be looking for people who aren't reporting.
correct.
Yeah, well, I think that's going to get easier.
Yeah.
That's
So,
it. That's
and
it.
really, and going through I went through a number of these last year, just, for the group and for myself and trying to keep up because all the DeFi stuff was so new for all of us the previous year that all of a sudden we got to pay for taxes. And it's like, it got to a point where I'm like, I can only do the best I can, and I think I got probably 98% of what was there, but it seemed like some little crappy coin that maybe I bought and it went away. And so I probably missed out on a loss or something like that. But, I do the best I can. But hopefully these tools are going to keep up. Because some of them, are not. And then you throw on those scam coins in there. And if you don't do that, you don't have those in there, then you end up with, this kind of balance. And it's just like, well, that's meaningless because I know I don't have that much,
So
to go through
let's
and
circle back to those scam coins for a second,
yeah.
Brad. So coins that have been put in your wallet that are not, you didn't have any activity, you didn't choose them, and you don't interact with them, you can discount those from your liability because they're not necessarily a coin that you have any interest in. You hide them in your wallet and you never touch them. You can argue that that's not an asset.
Right. Well, you never paid for them and you never sold them. So there's no,
But they have a value. And the government has already decided that an airdrop has a liability. So if you're part of the Bored Ape system and they drop you a bored dog or whatever the heck their next airdrop is, then you interact with that asset. That was a zero cost basis asset and you sold it for 2 ETH and you have a 2 ETH profit liability. That's just the way it works.
right. Oh, yeah.
But-
Obvious. Yeah. Yeah. Totally agree. Yeah.
But if you have a Bored Ape and some no-name group says, oh, I just airdropped everybody who had a Bored Ape 10,000 of my coin and my coin's worth $1, so I just airdropped everybody $10,000. Well, if you never touch that thing and you never use it in any way, you just hide it in your wallet. When you see it, you say, oh, hide, and then you never look at it again. You don't have to count that as part of your assets. That wasn't something that you benefited from. And there is a precedent in place for this. So, if you see a scam coin, like, I don't know, anybody here got a lot of SOS? Because I got a lot of SOS this year. And now it's worth like $3. And when I got it, it was worth like $30,000. Well, I never touched it. I never used it, and I'm not reporting it. And I won't have any liability because of it, because it wasn't mine. I didn't choose it. Somebody tried to give it to me and I didn't accept it. It's there, but I didn't do anything with it. And remember that some of these scam coins, you touch it, it drains your wallet. So
Right.
you don't want to go play with these things that you don't know what they are.
Absolutely. If you see something in your wallet that has the name of the coin is a domain, like, d00.org or something like that, don't go to that site because their only intention is to drain your wallet, because they're just waiting for you to connect and bam, all your assets are gone. And some of these you won't even know about because if you look in your wallet, they won't be referenced because the wallet doesn't know about them. But you some of these tools dig a little bit
Well,
deeper.
you mean like MetaMask or something where the contract isn't recognized, so it doesn't show to you. Yeah.
Exactly.
Yeah.
But some of these tools, and what, like this air, I have no idea what this is, but maybe air is the same symbol as a legit coin. And so this coin tracking tool thinks, oh, well, that's the legit coin that's worth 25 cents a piece. So now, this is worth $700,000 or whatever, kind of thing. So it's going to get interesting, and just to be aware of that can happen, out there. And that's why you end up with 358 million in your dashboard.
I have a general question regarding wallets. When we move currency, an asset onto or off of a wallet, there's going to be a fee involved. And when I was using CoinLedger, they don't require that you put the transits in or out of the wallet because they claim that the only liabilities or gains is when you buy or sell off the blockchain. But I believe I think that's where I'm losing some information actually. I have Theta, for example, and that goes in and out of a wallet onto an alternate exchange. And I can have all that in a spreadsheet. I know exactly what came in, what went out. I know what the fees are. I know how to track it back to the sites where I bought it or sold it. And yet I don't know that CoinLedger is processing it properly.
Yeah, usually when they see it go out of one of your wallets into one of your exchanges, they'll designate it as a transfer. And so it's not a taxable event. But are you trying to keep track of the gas fees or the transaction fees that you paid to move it?
Yeah, also, but CoinLedger doesn't require you even put a wallet in, which I think is a problem.
Well,
yeah, the transfer is not taxable, but the gas fee is a transaction. It's a taxable event.
Right.
Because they're considered that you convert the gas to cash. That's their opinion, is the transaction is from crypto to fiat to settle.
Yeah,
They don't understand crypto to crypto.
Yeah, but at the end of the day, the cost basis changes. It goes down based on the transactions and the fees incurred.
Yeah.
Yes.
I don't know if they're tracking that, but I'm sure that the CoinLedger would, if you transfer to something it doesn't recognize, just like Chris was talking about those transactions you had to review, and you had all these transactions to, say, an Exodus wallet, and you'd have to go in and say, okay, add that Exodus wallet. Otherwise it would look like you sold that coin, when it went to somebody else. And so you're like, no, I didn't sell it. I still have it. And so they'd want you to put the wallet address in there. But as long as you don't do any transactions to a wallet, then they wouldn't care about you adding a wallet. Does that make sense?
Yeah, but the point is, if you're using a wallet and you're going in and out of a wallet, you're going to be showing some fee.
Right.
There are costs.
Those are the costs that you want to add to your cost basis.
Right.
Okay.
That's right.
Yeah, good point. And I don't know if they're picking them up that way. That's a good question.
I do not believe, not that software. I do not believe they are.
My understanding is that ZenLedger does pick up those fees. I don't think they pick it up on everything, but they do pick up some of them.
Good point. Okay. Yeah, this is this is complicated. We're on the cutting edge of this. Keeping up.
So quick question on just particular coins and maybe some software that recognizes those. Is there a good one for Theta, for example? Because I think I'm losing a fee basis with the Theta wallet.
Yeah, my Theta, I've just been sitting in a wallet for years, so I haven't had to worry about that one.
So you're interested in tracking the fees associated with the transfers of your Theta? Is that what you're saying?
Yeah, well, both in and out, just the absolute cost basis as, you move it in and out of a wallet to KuCoin, for example.
Well, it's not the super busy time for these tax guys and tracking softwares to be the right time to go and ask them. So, send CoinLedger a message and say, hey, do you guys do this or not? And if not, why not? Right? It's still a relatively small industry. In crypto, you can still reach out to the founders of big organizations and they actually respond.
Yeah, I actually sent a note on Theta to CoinLedger, but I have yet to get a response.
We'll try some of the others too. Try ZenLedger, try CoinLedger. Send them the message and see who responds first. And then if you're really interested in using CoinLedger and not ZenLedger, and ZenLedger responds, we'll send CoinLedger ZenLedger's response and say, how come they respond and you don't?
Yeah, well,
put them on the spot. They're a business, right? They want to keep their customer. And if you're looking at the competition and saying, well, how come you don't do what they do? I imagine you're going to get more traction than you're going to get if you just go, hey, I'm over here.
Oh yeah, I mean, for sure. Right now, I think one of the good takeaways is that you may need more than one of these services to account for, your crypto, and you wind up just as much as it's nice to have it all in one site, maybe you just wind up, if you're just trading in and out of one coin and you're not mixing, you find the service that is optimized.
Yeah, and one thing that Chris showed, but just to drive the point home, is most of these tools you can use and you don't have to pay for until you actually get that report for the IRS,
Yeah.
to file with your taxes. So you can go in and play with these, and yeah, it may take you a few minutes to set up the APIs for the 10 exchanges that you use, but go in and do it and just play with them. And good point to, try these now and see what works and what doesn't work, and hit them with a message, not the last week before April 15th type of thing. And yeah, good point. Now, let's see, we have a couple headaches that we've gotten in the chat. I appreciate that. Mr. Conquistador, what's the biggest part of this that's caused you the headache, or is it something you're looking to avoid, or something you're trying to figure out? Or Frank? Yeah, or type in chat if you can.
Here we
Unmute.
go.
Oh, there you go. Yeah.
This is Michael, by the way, but I decided to be El Conquistador today. It's just this is just another reason why I mostly buy and hold, because this is not like tax trade, excuse me, stock trading, which I've done since 1982. It's very easy. It cost me $1,000. I made 1,500, or I lost 500. I take 1,000, I minus the 500, I had a loss, or I add the 1,500, I had a gain. It's very, very easy to do that. This is so much more complicated. It seems to me that if somebody could come up with an actual program that does all the things that, like Chris and Swami here were talking about, that they could make a lot of money off of this. But listening to all of this is one reason why I've been hesitant to do trading, because there's so many. This is like a bowl of spaghetti. There's so many different lines to where to buy an asset, and it comes from 4 different places at the exact time. That's just insane. So that's why it was giving me a headache, because it's just, I just go, thank God I just buy and hold for the most part. I trade a teeny bit. I have it in a year, but anyhow, that's my nickel's worth and why I was getting a headache.
Yeah, it makes you appreciate Fidelity and all the rest to take
my
all
gosh,
the
yes.
transactions and assimilate it for you into one line item.
Yeah, I used to trade a lot of options, and I might have 100, 200, 300 trades in the course of a year, but it was very easy to compare what my cost base is to what I eventually sold or lost against that. And that was a simple thing to do. But there's just so many moving parts that you just, I don't know. It's I don't know if it's worth the hassle. I don't know how
That's
Chris
funny,
was
because
doing it, talking about having 10,000 transactions. Talk about a real need for a program that skillfully and correctly associates all those buys and sells. And then, Brad, you're talking about getting free stuff that people just pop into your thing.
Well, and that's not even legitimate. It's more like people throwing trash on your front yard, and you're like, this isn't worth anything. I don't want it, but I've got to deal with it.
There you go.
But Brad, that's not the only things that fall into your wallet. I got airdropped almost $5,000 worth of ENS last year. That was legitimate. I sold it and made money on it, and that became part of my taxes. So they're not all bad news. But what I was going to say is part of the reason that this is complicated and funny is because there's so much more possibility to it than just going into the traditional markets. And part of the reason you want to be here is because you can benefit from that, the fact that it's a high growth, still not everything sorted out kind of an industry. If we're just talking about having some AMC or some GameStop, well, that's pretty simple and straightforward, and everybody's got it figured out how much I owe and how much they get and all of that. But when I'm playing around with NFTs, it's a little bit more Wild West. which I also think means that you might be able to rob the stage once in a while. So, you know, it's a big opportunity, and whether or not that opportunity yields for you depends on how you play the game. If you're not playing the game because you're worried about sorting out the details, then maybe you're excluding yourself from the opportunities that could come from playing the game.
Yeah, and it just illustrates what's possible now, you know, being able to use that aggregator to buy the NFT from the cheapest sites. Now, you know, we've got Hotwire, we can do that for hotels and airlines and that kind of thing. But I mean, some of this stuff, a lot of this stuff in decentralized finance or, you know, blockchain based, you know, is things that just weren't possible before. And so it's fascinating. Now, half of it may be useless and dumb, but I mean, there's some stuff out that we just couldn't do before this whole blockchain thing. So it's, but again, we've got to keep up with the tools to be able to report it. And so that, I see that's where the headache comes. And I agree with you, because I sat there trying to figure all this stuff out, you know, last year, and which tool to use. And like Deborah said, sometimes, you know, maybe you got to use two, and that's what I discovered, and that's what I settled with, and went from there. So
Hey, Brad,
yeah.
I know, I believe it's also a headache, but here's the way I look at it. Okay, so what we're trying to do, and so the IRS it isn't criminal to try, right? If you do something wrong, but you're trying, you're not gonna end up in jail. I know that. You tried your best, and you know, if they also know it's kind of a new realm, a new era, they're gonna help you correct it, and then you'll pay the difference. But here's the thing. 5 years I'm sorry, 5 years from now, when there's mass adoption and you got in really early and you established a cost basis, you know, so early, hopefully we're all going to be millionaires, right? Let's say 5 years from now, whenever there's mass adoption, everything you've got and you've held on to is going to be worth a lot of money. At least right now, you've established a cost basis. Yes, it's very low, but in 5 years from now, you're going to be hopefully wealthy, and you report it to the best of your knowledge and ability. But you're establishing right now that the headache that you're going through right now hopefully will pay off whenever there's mass adoption. So we have to kind of keep our perspective as far as, why are we doing this? What's the effort? What's the end game?
Right. And I kind of take that long approach that it sounds like you do, especially with all those NFTs that you had that you said you picked up for a low price.
Yep.
Before that mass adoption had, you know, the Funko, I know, you know, I've seen those things at different stores.
Yep.
You know, I recognize that brand, and I'm not even into it, kind of thing. So if they're doing this on crypto, I'm sure more of their current customers, you know, at Target, Walmart, wherever, will eventually, you know, buy those, you know, hopefully from you for 10 or 100 times what you paid for them,
Yeah,
you
and I
know,
have
last month.
thousands.
Yeah.
I have almost 3,000 of them, right? So my hope, and so what they're starting to do, and if we want to go down a specific road, is they're actually joining digital to physical. So you buy a physical now, like I did on Walmart. Their first one is DC. You buy your physical, you get their first like DC digital one. That's gonna be worth a lot of money whenever everyone starts going, hey, I collect these in the real world. I also want to collect them in the digital world as the mass adoption goes on. And I think that that's where the money is going to be made. We're all early.
Yeah. As far as that goes.
I agree with you, Chris. I like the idea. I like when I was seeing your spreadsheet out there, and you had all these, and there were fractions of a cent. And, you know, if you've got 3,000 something, you know, it's likely that some of those are going to actually going to pop, and that they're going to overtake the cost of the 3,000 that you put into it originally. And I understand all that. I mean, I've been in this since July of 2017. So, you know, I've got 5 years under my belt, and I've held a lot of stuff since then. But it's just this the trading part, I guess, is what I was talking about.
Yeah.
And I agree. 5 years from now, we're all going to be much more wealthier than we are now. I mean, just look at the last 5 years. You know, I mean, I was buying Bitcoin at $2,000 and $2,500, and so, you know, I'm up a couple bucks since then. So, you know, 5 years from now, even if you buy at 20K right now, 5 years from now is going to be I don't know if it's going to be the same type of run. I mean, I've got a 10 times on a lot of my stuff, but anyhow, but I do appreciate the input from all of you.
Yeah.
Yeah, and I think what you mentioned, Chris, is what I was trying to get the point across with, well, not so much today, but down the road, with using these tools is doing the best we can. Like Scott mentioned, he doesn't want, I don't want the tax guy coming after me either. And I don't think I'm going to go to jail, even if I only got 98% of my transactions correct. I tried, and if they look at the 823 pages of PDFs that I had for all these transactions, like, well, I'm trying. Maybe there's 7 pages I missed or something like that, but I'm trying. And we can only do what we can with the tools that are out there.
Yeah, but my concern is that they're not necessarily as smart as you or me. My concern is that they come and they say you owe money. And you have to be prepared to prove that you don't. At the end of the day, the onus is on you. And so this can be very swampy. And I don't know about, maybe trying will be good enough, maybe it won't. But I just know from business perspective, everything has to be auditable. And that's why I've been keeping my own spreadsheets. So
That's true. That's true. And so let me throw it as a caveat. And this isn't saying that I know the IRS, but I don't know the IRS, but I never worked for the IRS. But I have been a criminal investigator with the federal government for 24 years. I know the military. I know the mindset that goes with conducting a criminal investigation. And so if you are actually trying, let me caveat that. That's what I'm saying. So I'm a retired federal agent. I'm not with the IRS, but I did criminal investigations for 24 years. I still work for them as a contractor. I know the mentality, and if you're trying, if you're putting forth an effort, you will not be going to jail.
well, it's not jail I'm concerned about. It's the extra 10 grand that I don't think I owe.
That's true, and that's
Right.
where you have to become an auditor yourself. And I'm not an auditor, but I am a criminal investigator, and I know the mindset. So you have to really kind of know the people. They're really going after the people that are trying to get away with something. Yes, if you made a mistake and they caught it, yes, you're going to be paying for it, but you're not going to be going to jail. And that's where I'm really more concerned about is that the effort that showing that you actually have put forth an effort. And yes, you might have made an error, and yes, you might have to pay money, but it's your freedom that I'm more concerned about.
Yeah, you don't go to jail unless there's intent to defraud.
Yeah, I don't think any of us are trying to, go that route. I know I've heard comments here and there where people are just trying to hide things and, oh, I'm going to do this and outside of the country, and that's a whole nother story. And I don't think any of us want to go there. So, but yeah, you're right, Deborah. If we have to defend ourselves and say, hey, no, that's not a $10,000 profit because it cost me $998,000 or $9,998 or something, and it was only really a $2 profit. We do have to prove that. And yeah, so kudos on keeping records. And it's crazy trying to keep track. So if you're doing it successfully, I applaud you, because I don't understand how you could do it. That's why I depend on these tools, because it just gets crazy when we're moving stuff. It's so easy to do. Okay, I put $100 in Coinbase, I move it over here, I buy Bitcoin, then I use Bitcoin to buy this and this and this, and all of a sudden I'm 4 transactions deep, and I'm not keeping track of that.
Spreadsheet. You got to keep a spreadsheet. The spreadsheet's your friend. I do that every night. Every night.
Here's one of the things to consider. Especially when tax loss harvesting will be a thing of the past. Open a Roth IRA now. Open a Roth IRA now. Do all your trading in the Roth, because it's all one bucket. You're not going to be reporting any loss or gain. It's like any IRA or 401k. And any 5 years from now, right? Because here's, a lot of us feel this is a long-term hold. So you throw it in a Roth. If you don't have a Roth, you got to wait 5 years or 59.5 anyway. If anybody doesn't have a Roth, establish one now, even if it's $50, because any future Roths that you open are grandfathered into the first. And what a Roth is, basically, you pay the taxes up front, you throw your money in. And if you think you've got a long-term high possibility of large gain, that's where you want to put it. That's where any billionaire is going to try to put their money. Any millionaire is going to try to put their money, because all of that gain will not be taxed later. That's why Peter Thiel has $5 billion in a Roth that he's not going to pay taxes on. So to avoid the ref, potentially the IRA or the IRS coming back at you later, if you're looking at long-term holds for a piece of your money, then trade within your Roth.
Yeah,
And you can set these things up through an exchange like Gemini, so you have a wide variety of crypto to trade. Maybe not everything, you know, but at the end of the day, a lot of these Roths will be constrained, you know, by what coins they offer. But there's a company called Directed IRA that already has a setup with Gemini as an exchange, for example. You can look into them on YouTube.
and do they charge very, I know we've talked about that in the past, converting some existing IRAs into crypto compatible IRAs, and that, you know, some of the fees seem, but if you just start one, you know, like opening an account, are there annual fees, you know,
So
prohibitive?
it depends on who you look at. I had done in fact, you have, I think, my presentation from a year ago on these, and most of them did charge fees. However, iTrust Capital right now, they were charging roughly $30 a month. They do not do that anymore. They only charge fees on the trades.
Okay.
Look, I'm not sure about the long-term efficacy of the business model. It's, you know, these business models work while people are onboarding and they're buying their initial holdings. That said, iTrust Capital is a, you know, approved IRA 401k holder of, you know, crypto. So is Swan Bitcoin. They've just come out.
Or Choice by Kingdom Trust.
Yeah, Kingdom Trust also. They charge a higher fee. A lot of these companies right now will, you know, they charge maybe 1%, 0.99% on the trade. That's how they're making money.
Okay.
I'll put something in the comments on iTrust Capital. Some of these, it's like the old banks. They used to give you a toaster, right? If you open an account, iTrust Capital will give you, I think, $50. I'll put my link in so you can take advantage of that. I get $50, you get $50, but then if you give it to somebody else, then you get $50 and they get $50. So that's, you know, that's a promo right now. When these companies get more established, we'll probably see that go away.
Yeah. Okay, good. Yeah, and I remember iTrust, when we talked about that in the past, they seemed to be the winner. You know, we had a few people, you know, that actually had worked with them and had good things to say. So
yeah, so that presentation I did for you, I think is still relevant. Brad, if you find it, I think you've got it posted somewhere from last year.
yeah,
It's basically maybe a dozen of these companies. And I just kind of went through and I looked at, you know, a comparison, who is charging what fees, what they offered.
yeah,
So,
good point. I'll link back to that or something in these comments and in this group. Yeah, so make a note for myself. Okay, it looks like Frank comment about Reggie Middleton and then Yoshiko comment about that. If you guys want to jump in and just share it with us real quick on that. I know I was following Reggie's battles years ago, but I think it's been a couple of years since I've heard anything on there, paid attention. Where is he currently at? Okay, can you guys unmute, either of you, or still fighting? Okay. Good deal. Okay, well, maybe we can I'll put a link to that or something like that down the road. So good. Okay, any final comments on today's topic? But I appreciate you bringing that up, because yeah, he was doing some good stuff, it looked like, but he kind of got slapped down. Yeah, thanks for bringing that up, Frank and Yoshiko. Any other final comments today, guys, or any other things we should look out for? I appreciate you bringing up that Roth part of it, Deborah, because that's that would be an easy way just to start from fresh and just, hey, like you said, $50, $100, and then go from there. And
trade all you want, trade all you want. Doesn't matter. You don't have to report anything to the IRS.
or just hold. I mean, if you're a long-term holder of Bitcoin,
Right.
you know, like Michael's talking about, hey, better to do that within a Roth, you know, if you're not looking at touching it for 5, 10 years.
Deborah, did you mention the ceiling?
Oh, I did not. No. But there are ways around the ceiling. But the straightforward ceiling is that you can contribute, I believe it's $6,000 per year into a Roth. You have to be working to do that. And 7,000 if you're over
50?
59, I don't know.
I think it's 50.
50, okay, 7,000 per
Yeah.
year, if you're over 50. If you have your own LLC, you have your own gig going, you can, you hire your kids or your husband part-time, you can set up a Roth for them also. You can get all that going. Again, I'll direct you to Directed IRA, which has a lot of good YouTube videos on the topic. However, there are things, so that is per year, and that was for the average person to help them retire with some perks. And then what happened is that rich people saw this and there's like a workaround. If you want to contribute over 6 or 7K per year, it's considered a backdoor Roth, and that's when you have a regular IRA, money in that, and then you move it laterally from a regular IRA or 401k to a Roth. And in that case, you can contribute more than that upper limit. You have to pay taxes on any money that you put in a Roth up front, but that is a way around the ceiling, that 6 or 7K ceiling. And then you have to talk to your tax advisor on what makes sense and how high you could go. The IRS is going to be clamping down on that loophole also, because very wealthy people have been abusing that.
Okay, good deal. Good deal. Okay, well, yeah, we're gonna have some more links here in the Google Doc, and I'll include the link to the Google Doc is in the meeting description for today's meeting, and then I'll put the recording of on YouTube in the comments section as well for the meeting. So good. All right, guys, we'll shoot for talking NFTs and metaverse updates next month, and get some updates and hopefully some fun things. Maybe some of us will get NFTs in our stocking or our virtual stocking this year, kind of thing. So appreciate you guys joining us, and look forward to seeing you next month virtually. If you're in the Fresno area, we're meeting in 2 weeks. I think it's 2 weeks on Sunday at the same spot to meet in person at me and Ed's there. We're going to skip that in December because that's right, around the holidays, and we'll have plenty of things going on, and then we'll pick that up again in January. So Frank, hope to see you, maybe in a couple weeks at that. I know you're in the area, and anybody else is welcome as well. So have a good rest of your day, guys.
And
Thanks, Brad.
Yeah,
Thanks,
go ahead,
everybody.
Deborah.
just if anybody wants to just direct message me through Meetup or get my contact info from Brad, if you want those links to like Swan or iTrust Capital for a few extra bucks if you want to sign up. I don't even think you have to trade. I think maybe with one you do, maybe with one you don't. But feel free. And Brad, I'll just send you my info if you want to include it too. Those links.
Yeah, and the Google Doc here. Yeah, and we can always contact each other directly through Meetup to do like a personal message or their private message, whatever they call it. And sometimes I don't see those right away.
And as a question, since we have just a few people remaining, if anybody would like to contact me just to talk about tax loss harvesting software and how you're doing and how I'm doing and tips and tricks, I'd love to talk to you and get educated myself and share any knowledge I have.
Yeah, absolutely. Absolutely. Feel free to reach out to each other and all that. Good. Okay, guys, have a good rest of your day, and we'll see you in a month, and hopefully some of you in person here in a couple weeks in Fresno.
Thanks, everybody.
Thanks for doing this, Brett.
Take care, guys.